Good morning. Welcome to Stock Market Today. It's Wednesday, April 29th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today where you can sign up for a free email. Get a lot of the content for this show as well as stock ideas for you to consider. Those hit your inbox every trading day before the market opens. So U.S. equities were mostly lower in Tuesday's trading, but small caps managed to buck the trend again. Energy, materials, and industrials outperform while healthcare and comm services lagged. Recall many of the bullish divergences that we highlighted on the show here yesterday, as well as the bearish divergences. Treasuries were stronger with the curve flattening. The dollar was weaker on the yen cross, but flat against the euro. Gold was down 10 basis points and crude was off 3.4% in very volatile trading. At one point, it was down nearly 25% earlier in the day. As we get to the desk this morning, futures are up about 1%. After Asian markets were mostly higher overnight, led by Taiwan. Japan was closed for a holiday. European markets are higher. Treasuries are slightly stronger. Dollar is extending its weakness on the major crosses. A couple days now of dollar weakness playing out here in the marketplace. I'm watching the key $27 level for UUP. WTI crude, on the other hand, is up 15.2% in early trading here on a Wednesday morning. So as we take a look at the structure of the S&P 500, we faded from the top of the resistance range, right? We were calling out this kind of 2850 to 2930 area. Tried to break through yesterday and then faded throughout the remainder of the day. 2750 remains initial support. 2450 to 2600 holding key retracement levels to the downside should 2750 give way. We've left over bought conditions in the near term, and Chaikin money flow is on the verge of turning bearish for the index. For the S&P 500, it actually has dipped slightly into bearish ranges. So on the verge, not quite there just yet, but something to keep an eye on as we move forward throughout the day today. Recall, we're also going to get our initial look at 1Q GDP, and there is a Fed meeting today. So what are we talking about in our note today to Chaikin Analytics clients? Well, early rally fades from the top of the resistance zone. We talked about that already. Small caps outperform again. They actually closed higher on the day. So 3 out of the 4 major markets were down. You'll see that in just a moment, but small caps were higher on the day. Sentiment continues to move away from fear. We'll take a look at that on Wednesdays. We look at sentiment in my note to Chaikin clients. And telecom stocks are showing signs of relative strength. So we'll take a look at that chart, as well as the 10 names that have bullish or very bullish ratings at Chaikin Analytics. And as I said, futures do point to a higher open ahead of the GDP report at 8:30 a.m. And we do have a Fed meeting today. So we'll hear the takeaways from that later this afternoon. So we look at the major indices from a power bar perspective. The Dow is off 12 basis points, 3 to 11 bulls to bears there. S&P 500 down about 0.5%, 57 to 146 bulls to bears. NASDAQ was an underperformer. Remember, we started talking about potential signs of rotation, those divergences that we called out. Well, one of them is certainly in the growth landscape. So NASDAQ was down 1.8%. But we do have a busy week of key large cap growth earnings this week. Google reported last night, and that stock traded well after the close. Small caps outperform 265 to 340 bulls to bears. Bonds go higher, sending yields lower. And energy outperformed on the day yesterday, up 2.3%, still 0 bulls to 16 bears within the energy sector for the S&P 500. Taking a look now at our stock of the day, I'm highlighting in my note to Chaikin Analytics clients, it's Centene. CNC is the ticker symbol there, has a very bullish Chaikin Power Gauge rating, and that's largely a function of very strong earnings performance, very positive expert activity, as well as attractive financial metrics. So when we kind of boil it down, we take the 20 factors that go into our model every night, we come out with that very bullish rating for a stock that's in a strong trend and in a strong industry group. What I see here is a breakout and then a pullback to retest the breakout level at around 65 to 67.5. Stock is oversold with bullish money flow, and it's been an outperformer. So we have a very bullish rating, outperforming the market, oversold with bullish money flow above the trend line, tag the 21-day moving average, and try to rally. So I think as long as we're kind of holding above this 65 level, Centene looks fairly decent as a bullish idea, as always with a solid risk management process that fits your risk tolerance as well as your time frame. We lay it out, our thoughts in our note today, so take a look at that. But Centene kind of looks interesting, right? As the market is moving towards an oversold condition. Based on our indicator, this stock is already oversold. Taking a look at our sector tracker now, the movement of the major sectors over the last 5 days, and we have to start asking ourselves, are these the early stages of a rotation or simply just a counter trend rally, right? We talked about the divergences in our note yesterday and showed you examples of some of them during this show, but early signs, or at least very early days, of outperformance on the part of the more cyclical areas of the market. Energy at the top of the list here, materials, industrials, and financials round out the top 4. Discretionary tech, REITs, and comms are middle of the road. Utilities, healthcare, and staples, your more defensive areas of the market, towards the bottom of the list. Now, what we will say is that all of the sectors are higher over the last 5 days of trading, as the market has, for the most part, worked higher. But interesting developments that I think are worth keeping an eye on. If you're betting, or your view is that we could see a rotation into the more cyclical areas of the market, you're going to want to see the leaderboard continue to look like this, to make you feel comfortable that it's more than just short covering, more than just counter trend rallies within the context of strong existing downtrends. One area of the market, however, or industry in focus that continues to lag, is bank services, right? Over the past 6 months, this group, measured by KBE as the ETF, has underperformed the S&P 500 by over 28%. Power bar ratio, which measures future potential, is very weak. 0 bulls for 26 bears, earns it a rank of 21 of the 21 subsectors that we track, having moved down 1 slot over the past week. So some of the indicative names there: Lending Tree, TREE, with a very bearish rating; Community Bank, CBU, with a very bearish rating; and Commerce Bank, CBSH, also with very bearish rating at Chaikin Analytics. And as we take a look at the fund here, KBE, as I said, the ETF rating is bearish here, right? We're in a weak trend below that declining long-term trend line, right? There's your ratio. Chaikin money flow mixed with a downside bias. The fund is rounding out of an oversold condition, but has been lagging since the beginning of the year. It's interesting, right? For those kind of betting on the return to cyclicals, or, you know, having that view, you actually started to see signs of that in the 4th quarter of last year, where you saw, you know, that kind of reflation type trade beginning to play out in the market, which quickly gave way at the start of the new year. So we have to start to wonder, if you're in that camp, that's what you're on the lookout for. You know, could it persist for a few months? Absolutely. But, you know, obviously you want to continue to look for those signs. Right now, we're not there yet, still an underperformer, but just want to call out some of the potential similarities to what we saw in the 4th quarter of last year. Taking a look at what's trending now, yesterday's S&P 500 movers and shakers are gainers and losers. Harley-Davidson, HOG, still with a very bearish rating, but that stock up over 15% following their earnings and commentary about sales trends. ADS up 15%. Didn't see anything company specific there yesterday, but do note that the stock caught an upgrade on the 27th. ADS higher by 15%. Norwegian Cruise Lines provided a business update on the 27th. That stock was higher by 14.4%. And then we had some airline data come out yesterday from the IATA, and that helped Alaska Air, ALK, with a neutral rating, rally 13.4%, and American Airlines, with a very bearish rating still, rallied to the tune of 12.4% on the heels of that data. Loser side of the board, Cincinnati Financial down 12.5% following their earnings report. Did catch a downgrade here today. UPS down nearly 6% on the back of their earnings announcement. That stock as well caught a downgrade here today. MSI down 5.8%, nothing company specific there. WAT down 5.6% following their earnings announcement. And INCY, a very bullish stock, down 5% yesterday, caught a downgrade here today based on some of the news that I've been reading. So those are your movers and shakers on the day yesterday. Again, start paying attention for potential signs of rotation. We're going to start to watch it. We're always watching it in our sector rotation work on Tuesdays. We started calling out the divergences yesterday. We're going to see if those divergences materialize into a change of trend, or are they simply counter trend rallies within the context of existing trends. But today is Wednesday, and on Wednesdays we look at sentiment. And I guess what we could say is sentiment is less fearful. Starting with the 13-day moving average of the CBOE equity put call ratio, you can see these extreme swings that we've seen over the past few months. We went from exuberantly bullish to woefully fearful in a short amount of time with the collapse in the market. And now we're back in the range of kind of what is quote unquote normal, if you will, but actually getting towards the lower bound of that range. So as the market has rallied, sentiment has continued to improve, pushing this ratio towards the lower bound of what is quote unquote normal. At the same time, the VIX continues to normalize, right? Back below 35 for the VIX, and starting to get inside some of the extreme peaks that we've seen over the past 5 years when we've seen flare-ups in volatility. Interesting to note that, still considered elevated for all intents and purposes. And my note to clients, I usually include a regression line. We're still above that regression line, but we have kind of alleviated some of the stress in the market. The VIX did get over 80 back in late March as the market was making its lows. So interesting developments within the sentiment landscape. I also look at the CNN Fear and Greed Index in my note, and that's kind of back in the 40 area. So still a level of fear in the market, but well off the extremes, obviously, that we saw in the late March timeframe as the market was bottoming out. So continue to monitor the VIX, continue to monitor sentiment. What I would say is, be on the lookout for, a break below this line, for sentiment becoming maybe a little bit too greedy, if you will. I mean, I can't believe we're talking about the shifts, but the sentiment shifts do take place at a rapid pace. So continue to monitor them. We always do. We include it in our note every Wednesday morning. Small caps, all eyes are on small caps here. Small caps have been underperformers for a long time. Been one of our least favorite areas of the market for a long time due to that underperformance. But we've seen some strength in small caps, especially on a relative basis over the past couple of days, right? So if we take a look at the IWM, the iShares Russell 2000 ETF, we can see the rally off the lows. And what's interesting to me is that small caps actually bottomed ahead of the market, retested when the market made its low, and then has been rallying ever since. Now, still a lot of work to do, right? There's a huge resistance zone up ahead that begins around, call it the 141, 142 area. Remember, 141 was the area for us that if broken, we said we could see a cascade to the downside. So we did break that level back in early March, and that cascade did ensue. So now we've rallied back, retaken the 50-day moving average, still below the 200-day moving average as the RSI moves from oversold and pushes towards the top end of bearish ranges for this indicator. So that's something we want to keep an eye on, right? If you expect small caps to continue to trade well, you're going to want to see this RSI shift up into bullish ranges. Early days, something we're keeping an eye on. Also keeping an eye on this relative pattern here, right? Relative to the SPY, fell off a cliff, right? Continuation of the trend, then began to consolidate. And now we're trying to poke through the top side of that consolidation. So something that we want to be watching very closely here as part of that rotation, right? If it's going to play out, we would expect to see a continuation higher in the relative performance of small caps against the broader market. And finally, I said we'd look at telecom, emerging leadership here. Right, broken above the 50-day, broken above the 200-day, back into this congestion zone that marked trading for much of last year. Overbought in the near term, but the relative is what has me here. We've broken the downtrend line and continuing to move higher. So that's an interesting development to me. I always like to look for where leadership could be shifting. And telecom is one of those areas measured by XTL. I drilled down a little bit and looked for the stocks that have bullish or very bullish ratings at Chaikin Analytics and included them for you here today. So these names could potentially warrant some more work. That'll wrap us up. ChaikinAnalytics.com/test drive for a free trial. I'll be back with you tomorrow.